Good afternoon, everyone, and thank you very much for being here. My name is Filippo Pallaroni, and I work as the Training Center Coordinator at the EU SME Centre. And today I have the pleasure of welcoming you to the Payment Option and Foreign Exchange Control in China event that we decided to organize out of a report that we recently published. First of all, let me walk you through the agenda following the opening remarks, where I'm going to introduce the work of the EU SME Centre. We're going to have a main presentation on the report that we published. As you can see in the slide, we will cover 4 different topics. So payment in freely convertible foreign exchange, payments in Renminbi, payment from outside mainland China, and real case scenarios in foreign exchange and cross-border payments. The author of the report and also the speaker for today is Simone Restaino, business advisor at RsA Asia, a tax and corporate advisory firm here in China. Thank you very much, Simone, for being here. Before leaving the floor to Simone, let me quickly introduce the work of the EU SME Centre. Here you can see that our main focus is helping European SMEs explore the Chinese market. We are a EU-funded project that started in 2010, and the idea is that we basically provide free services to all European SMEs that belong to the Single Market Program, and we do that through a project that is being structured around phases. We are currently in the 4th phase that's going to end in June, so next month. And as you can see here, our project is being implemented by a consortium of 4 main partners. 2 are based in China. The first one is the China-Italy Chamber of Commerce, and the second one is the European Chamber of Commerce in China, that today is the co-organizer of the event. For what concerns the other 2 partners, we have the Italy-China Council Foundation and the Sociedade Portoghese de Inovação that are based in Europe. And we also have 2 associated partners that are the Trade Promotion Europe and EU-China Business Association. A quick word concerning the main activities that we carry out. First of all, we have on our website a self-diagnosis tool that is basically a tool that all companies can use in order to test whether they are ready to enter the Chinese market and whether they're ready to set up operations here. And basically, it means that companies can go on our website and fill out a survey that will give them a result based on the inputs. Second of all, we are a knowledge center. Knowledge center means that basically we produce knowledge, we produce report, articles, guidelines, that then become part of the events that we organize. And for example, in the first place, we published the report that we're going to explore today, and this is why we're having an event as a follow-up. Thirdly, we are an advice center. It means that we have an in-house experts that all European SMEs can contact and reach out to directly, where they can ask whatever kind of questions they might have on the Chinese market, and they will receive a prompt reply from us. Fourth, and this is precisely the section that I'm in charge of, we organize trainings. It means that we have both online, such as the one that we have today, and hybrid workshops, where we try to select topics that are particularly relevant for European SMEs, and we try to convey experts that can explain in a way what's going on and what can be some recommendations that we can provide to companies. Finally, we are also an advocacy platform. It means that we tap into the well-established resources of the Italian Chamber and the European chambers in China. And basically, we try to bring forward the concerns of the companies and try in a way to let the message through and reach competent authorities that can help improve the situation. That's it for what concerns my presentation on the EU SME Centre. I think that now I can leave the floor to Simone. So Simone will stop sharing the screen and leave the rest to you.
Okay. Hi to everyone joining today's webinar. So just a very quick word about myself. Philippe already introduced me. I'm Simone Restaino. I'm business advisor for a consulting firm, which is located in Shanghai. That's the location where I'm currently So I will go to the next slide. This is the table of contents. So we basically split the presentation about this topic. But first, we will have a quick introduction about doing business in China. So basically, doing business in China offers significant commercial opportunities, but when it comes to cross-border payments, often challenges arise. A concern that is for many exporters is the financial reliability of the Chinese buyers and how to protect themselves against delayed or missed payments. While many of the obligations fall on the Chinese importer, is anyway essential for the foreign exporter, for instance, an European Union small, medium enterprise, understand the obligations and all the related process. This kind of knowledge, for sure, will help to prevent misunderstanding that sometimes are also cultural, may I say, and will allow exporters to manage the risk, especially in the cases where the buyers demand more favorable terms, when there are delayed payments, discussion about this, or when they fail to meet their payment commitments. So just few consideration when you engage a business with a Chinese counterpart is for sure to assess the reliability of the local partner, to understand all the procedures related to the payments, and also very important is the documentation, and also have, let's say, a quick or a small understanding about the regulatory frameworks about the banking and the compliance. So these guidelines, we will try to provide a practical guidance and will help, hopefully let the exporter to have an informed decision. So now we will start with the first section. For sure, China continue to maintain a strict control over the foreign exchange. In practice, this control is exercised by monitoring the flow of the foreign currency through two types of accounts, the capital and the current account. In this presentation, we will focus only about the current account. In fact, the current foreign exchange control regulation dates back to 1996. And what happened is that there were lifted the restriction about the current account transactions, while, as I said, the capital account is still, as today, highly controlled. The current account, which is the focus of today's webinar, includes both the trade-related and non-trade-related, which are the services, transaction. Just to have a quick word regarding the, let's say, the foreign exchange administration for the Chinese buyers, which would be our counterpart. So for Chinese buyers, it's permitted to purchase foreign currency only for current account transaction, as long as this payment is supported by a real and an underlying transaction. For example, if a Chinese company imports goods from abroad, it can purchase foreign exchange from a designated bank to pay the overseas exporter. To do so, the importer, the Chinese company, must present a series of documentation, such as the contracts, the invoices, the custom declaration to the bank in order to confirm the legitimacy of the transaction. Since August 2012, it was an important date. The announcement number one basically lifted and make the, let's say, the model of verification for this kind of payments easier. Is now possible to prove and to submit all the documentation online. Okay, in this slide, basically, I want to emphasize the fact that the Chinese enterprises are classified in three type of categories, and this is based basically on the compliance history, and as a result, basically, of a safe inspection. This kind of classification also has a real implication for foreign exporters. In a little bit, I will try to make a few examples. But anyway, working with an category A importer means that the payment process typically is faster and more straightforward. Two examples to illustrate how the shipping and payment arrangement may impact a foreign exchange compliance can be, for instance, a Chinese buyer instruct an European exporter to ship the goods to mainland China and make the payment from their Hong Kong account, so from another jurisdiction. In this case, there is a compliance risk because there is a mismatch between the goods flow and the money flow, but this one will still be, let's say, on top of the Chinese buyer. It won't have any effect on the European exporter in receiving the payment for the good. Another example may be about the Chinese buyers who instruct an European exporter to ship the goods to one city in mainland China and then to make a payment from another city. In this case, even the location may have some kind of impact about the, let's say, the success of the payment. But as long as the bank account in the other city still belong to the Chinese company, they will still need to be submitted the document as I previously shared. The payment could still be validated. So there are this kind of situation that can happen. Let's, switch now the side of the point of view. So basically, getting paid is fundamental for every business. So when it comes to international transaction, especially when you have to deal or work maybe better with Chinese customers or buyers, probably the experience is quite different from the domestic payments. This is due a series of factors that basically influence the process. The main point to consider when you decide about how an exporter how to be paid basically is the level of risk that in this case both the exporter and the customer are willing to take. There are various types of risk involved, and this one basically depends about the payment method chosen. As you can see, we have this series of arrows, which basically they go from the least secure to the most secure method of payment. So we will try to make a quick words about all of them, emphasizing the let's say the advantages and disadvantages of each. So the first, the more secure type of payment is the advance payment. The reason basically is, I mean, this kind of payment usually is the least attractive option for the buyer, because under this method, the exporter receives the full payments before the goods are shipped. When the trade payments is made by telegraphic transfer, it means that the importer makes an upfront foreign exchange remittance through their bank. The importing company is the remitter, and basically the bank acts as a remitting bank. The Chinese foreign exchange regulation require a specific set of documents and supporting vouchers to validate this kind of payment or prepayment under the telegraphic transfer. One key aspect to keep in mind is that once the goods arrive in China, basically the importer must report this prepayment transaction to the safe through a system that is called the trade monitoring system. This method, for sure, is the safest and offers the maximum security for the exporter. But it's important to be aware of the compliance requirement on the buyer's side. So this is also the reason why the buyer, need, when possible, it will try to avoid this kind of payment. So another method for payment is the letter of credit. This, for instance, this style of payment is quite common. It's often seen within international transaction. And when a letter of credit is open, it offers the exporter not just a commercial credit, but also a conditional payment commitment. So basically, this is like an additional layer of security that enhance the exporter credit standing, and in many cases can help to negotiate more favorable price terms for the goods. The letter of credit are widely used in international trade because we can say essentially they introduce a neutral third party, which in this case is the bank, in the transaction between the exporter and the importer. The payment is guaranteed, but only if the exporter presents specific sets of documents to fully comply with the terms agreed by the buyer. This is just a few words, but I want to, let's say, focus a bit about this flow chart. I try to explain all the steps involved. So an example is the one where the important start the process by applying to their bank and to open a letter of credit. The issuing bank then will send the letter of credit to the seller, bank that was chosen and that was advised. So this bank, this advising bank, notifies the seller and forward the letter of credit. After receiving it, the seller will ship the goods and they will start to gather all the necessary documentation that are the bill of landing, the invoice, and the packaging list. These documents are important and they need to be submitted along also with the payment draft to this advising bank. That we also you will check, review, check the rightfulness of this document, and they will be sent forward to the issuing bank. The issuing bank will later notify the importer that the documents arrived, and after a review, basically the importer will confirm the acceptance and will prepare for the payment. Now, the point 8, the issuing bank now will start to perform the payment to the advising bank, which it will pay basically to the seller, and then let's say at the step 10, basically the almost at the end, the importer will authorize the issuing bank to debit the payment from their account, and once the payment is confirmed, the issuing bank will release all the original documents to the importer, and after the goods will arrive to the custom clearance, the importer will reports the payment under the letter of credit through the SAFES trade monitoring system. So the flow, this one is has quite of steps. Is not that complex because also there are the banks involved that will take most of the things, but as I try to say in a clear way as possible, there are several steps involved in this kind of option. Now we check the third according the let's say favorite or safer way of payment, which is the clean collection. There are two types. There is the documents against payment, which is the payment made on site, and D/A is the documents against acceptance. The payment in this case, it will be made on a later date that's agreed between the parties. So clean collection, as I said, offer more security for the exporter compared to direct remittance, which is the last method of payment. This one mainly because the exporter's document are sent directly from the overseas bank to the buyer's bank in China. And this kind of step, it will take place after the shipment of the goods, and it will include instruction that the buyer must follow. And in the case the buyer won't follow this instruction, the exporter will retain the ownership of the goods. The buyer's bank, in this case, will act based on the instruction received by the exporter via the remitting bank. And this is often is used as an effective way or communication channel to resolve disputes that may arise between the parties. The time that it takes to complete the collection can be also shortened if there is an immediate credit arrangement, that this is and also like a clause between or an agreement between the two banks. This style of payment is commonly used in those cases where providing the full commercial documents is complex, or let's say difficult. This kind of let's say example of group is regarding the product samples, the software, for instance, seasonal merchandise, or other or intangible services, like, for instance, we can think about the technical support. So now we check the last method that we talk about. This method, we put it last because it's the least security method of payment for the exporter. But this one, on the other side, it will make the most favorable, the most attractive for the buyers. In this case, the goods are shipped and the document are sent directly to the buyers, along with the request for the payment, either immediately or at a future date, and that the both parties have agreed on. In this case, the exporter has a very limited control over the process. The only leverage is could it be about imposing conditions for future transactions, such as can be requiring credit insurance to protect against the risk of the insolvency of the buyer. For the buyer perspective, what it makes it attractive is the advantage regarding the terms of cash flow and the lower cost that are involved. So I can say that this is why direct remittance should only be considered and then use only when we can say this is common, so only when there is a certain degree of confidence that the buyer will go through with the payment. Now we check this slide, being paid for exporting services to China. So the Chinese businesses are permitted to convert. I mean, I mentioned briefly earlier. So basically, the Chinese companies are permitted to convert foreign currency freely for a current account transaction only. And this one will also include payments for trade item and non-trade item, which are the services. According to the announcement from 2020, number 14, that was issued by the SAFE, which is the State Administration of Foreign Exchange of China. The requirements, the documents requirements for this for the service-related transaction have been updated. Is important or is worth to note that for the transaction up to 50,000 US dollars, this is something that we typically see. The bank do not review the supporting document unless the nature of the funds is unclear. And if this is the case, for sure, the bank we will come back with requests about support documentation from the domestic party which is involved in the business. On the other side, for all the other transactions that are above $50,000, for sure, in that case, let's say almost automatically, the bank will carry out the due diligence, which means checking the transaction entity, the amount, and the purpose, and check if these elements are consistent with the declared foreign exchange payment. While this revision makes smaller, in this case, below $50,000, it will be easier. I mean, the responsibility of the compliance is still borne in the bank. So now we will move to the second section of the presentation. I will try maybe to move a little bit faster. About this, there will be an introduction about the payment made in RMB. The People's Bank of China, which is the main bank of the Chinese government, throughout the years has taken significantly step to expand the use of the CNY or RMB for both trade and services related transactions on a global scale. The broader goal is to gradually move toward making the RMB a convertible currency. So to make the use, let's say, beyond mainland China. And this is actually something that in today's, let's say, years, this kind of shift is already happening. In the past, the Renminbi previously, yes, could only be held within China, and today is actually China's currency is held and is also used for investment overseas. As of today, there is also this kind of statistic. There are more than almost 1,000 financial institutions across over 70 countries that are actively doing business in RMB. Another important point that often come up in discussions with people who wants to make business with Chinese companies is the fact that you don't need to establish a legal entity in China or Hong Kong to open an offshore RMB account.
Simone,
Okay.
Simone, sorry to interrupt.
Yes.
I just wanted to tell you that we have 10 more minutes.
Okay. Maybe I will. I mean, sorry, I was a little bit slow because there is so much to talk about the presentation. May I maybe skip to the real case scenario? maybe that could be what's more interesting.
Maybe try to quickly sum up the remaining slides and then go to
okay. So foreign companies have, traditionally, historically, prefer to negotiate international agreements in foreign currencies like US dollar and euro. This approach basically can also create a competitive disadvantage when dealing with Chinese businesses. And in many cases, so we recommend switch to the local currency as effective strategy for international trade. Some benefit could be also the transaction cost if you use the RMB compared to the to US dollars. Here we can say that overseas company that engage in import-export trade or have some or have the need to RMB settlement, they can partner. They can. These can open a RMB commercial. Cannot see here the screen. Sorry. Accounts in overseas participant banks to settle their trade in RMB before the import and export transaction take place. This one I will try to move. Once a foreign company received an RMB payment, what can it do with it? It can use for future payments. It can set payments for services provided by Chinese supplier. This is something very common. Or can also use that kind of currency directly within China. Alternatively, it can exchange that currency with a preferred one. Here there are a list of advantages and disadvantages of doing business with CNY or using CNY renminbi for cross-border transaction. Overall, I will say that RMB basically improved the efficiency of the transaction, so the settlements will be faster and smoother if used. And then, as you can see, there are also some limitation or disadvantages because some markets have cross-border restriction about the CNY. Here I will try to go a bit faster. Chinese company, domestic or foreign invested, can pay an overseas from an offshore account. This is something that earlier I was mentioning. And under the current regulation, the Chinese company are permitted to retain foreign exchange revenue from trade or service trade activities in offshore bank accounts. The funds retained offshore may be used for goods or trade payments. Now I bring two cases about cross-border payments. As you can see here, this is the background. This can be a real case where an European company supplier export equipment of a value of €500,000 to a Chinese company, Shanghai Machinery Equipment. This transaction is set via telegraphic transfer. There is two payments, one of 30, another the remaining of 7%. The Chinese company funds the payment through a combination of foreign exchange account and purchase of foreign exchange. So this is also something that often can happen. Here I make this flow about all the steps involved in the process about selling goods to China. I will try to be as fast as possible. So at first, this process will start with the two parties, as I previously mentioned, signing a sell contract that will outline the key terms, such as price, delivery, schedule, and settlements, in this case in euro. And is very important that the contract complies with the Chinese Foreign Exchange Administration regulation to ensure that the validity of the contract, this is an important step. So move on, then there will be the transaction details, and these are reported through the trading goods for foreign exchange and for the safe, basically. And thanks to due to the fact that, as I mentioned, in 2012, there was a reform. Basically, part of this documentation was streamlined, so it became easier to supervise. And basically, the key document in this stage are the contract, the pro forma invoice, and the import custom declaration. The third step is optional. If the Chinese importer doesn't already hold the euro currency, as they agreed to use that kind of currency for the transaction, we can apply to the bank to purchase the currency, exchanging with the RMB. In order to do so, the bank will check the transaction documentation, and it will verify the authenticity before proceeding at the current exchange rate. So now at the stage 4, there is the first tranche of the payment. The payment is around 150,000 euro, which is the 30% of the contract value. This payment, this part, let's say, it requires to submit the contract, the proof of the currency exchange if the previous point was made, and a remittance application to the bank. The payment is soon after proceed through the SWIFT network, and will have a small percentage of fee involved. Usually this kind of payment, this kind of cross-border payment will take from 1 to 3 business days. Next phase is the exporter will ships the goods in this case, and will provide some key documentation such as the bill of lading, the commercial invoice, and the packaging list. The Chinese buyer then will declare the goods with the custom and will pay the duties and the VAT due. Then they will have the last tranche of the payment. This will happen once the buyer will receive the bill of lading copy, and it will perform the remaining payment of, in this case, 350,000 euro. And it is possible that at this stage there is a kind of request from the bank, such as it's possible that they may ask to check the contract again, or if there is the inspection certificate. Just a quick word: to manage the foreign exchange risk, the forward contracts or other hedging tools can be used. At last, after the transaction is complete, the bank reports the cross-border payment to the safe, and in this case, where we are dealing with goods under the category of goods, compliance check will be conducted to ensure what we can define as consistency across the contract, the invoices, and the declaration made at the customs. When, as I mentioned earlier, when the prepayment exceeded the 50,000, this threshold, there is an extra request for the bank that the bank will require for the compliance. I have another case scenario. Maybe it's a bit, I don't know if I have enough time, but for sure you can find both import, export, real case scenarios like what I just showed you for goods and services on the guidelines that Filippo shared. So if it's okay, I will skip this one here, and I will go directly to the conclusion, just to give some quick comment. Or let me say some best practice recommended when entering or managing relationship with Chinese counterparts. So it's very important to review the contract carefully and checking in advance with the banks regarding the required documents and the payment procedures. This, I think, is one of the most valuable advice. Usually, I mean, if possible, for sure, choose an experienced importer and try to verify their compliance status and records. Also is always good practice to stay updated and informed. So as I mentioned, the SAFE is one of the main body involved in this kind of framework. So always try to read news regarding the SAFE's regulation, and also the local banking practice. Definitely, the last advice I can give is the one to always engage with the professional advisor if there are needs, so to be assisted, especially from the tax assessments on filing of the requirement for the China withholding tax record form, because also this kind of strategy can have a big impact about the amount of the transaction.
We're going to have a Q&A session now, but since I think that due to the time limit, we won't be able to answer all the questions, I wanted to show you our Ask the Expert function, where basically, if you have any other question, you can simply go on our website and click the button Ask the Expert, where you're going to have a form that you can fill out and basically include all the information concerning any possible question. Yes, so this is the form. In any case, this is the button on top right. Additionally, I wanted to mention that we already received 5 questions from the audience during the registration procedure. I think that we can start with them, and if we have time, we also received some questions, a couple at the moment, in the Q&A window. But if we don't have time to reply, I would warmly invite you to use the Ask the Expert button, and I will make sure that all questions will be answered by us. So I'll start by copy-pasting the 5 questions we've received already from the audience, and I think that we can rapidly go through them, Simone, if that's okay for you, and then we can see if we have time to tackle the remaining 2. So I think that we can start with the first, and the first question is, are there emerging payment platforms or fintech tools that can simplify cross-border payments while staying compliant with local FX controls?
Yes, absolutely. In the recent years, of course, this is something that is very important for a lot of companies. So for sure, there were people who try to meet these kind of needs. There are several fintech platforms in China. They are specifically designed to facilitate cross-border payments, especially for the small and medium enterprises. There are a platform that I can, let's say, recommend is the Liang Global, which basically also X transfer that only have a very brief knowledge. Basically, they operate with a licensed bank and within the China foreign exchange regulatory framework. Usually, I will be very brief. These tools, can reduce the burden, documentation, and streamline the whole process.
The second question we received says, according to the People's Bank of China provision, how much can US dollar and euro float against the renminbi daily?
Okay, yes. According the Bank of China, People's Bank of China, there is a difference. So the US dollar is allowed to fluctuate within a daily band of plus and minus 2% against the Chinese RMB. OCNY is the same. And this is based on the official central parity rate that on a daily basis every morning is published on the website of the bank. For other major currencies, for instance, like the euro that was mentioned, there is a fluctuation that's a bit wider, and it goes from minus to plus 5%. So it's important, actually, it's important to have an understanding that there is this kind, be aware about those limits, especially if you use as a pricing or hedging tool.
Good. So the third question asks, can you do compensation between payables and receivables between China and Italy?
I mean, this is something that often is being asked during my work time, during the meetings that I have with the Italian headquarters regarding Italy and the subsidiary that, in this case, they have in China. And in principle, no. The direct compensation or netting cross-border payables and receivable is not permitted in the framework under the rules that manage the China's foreign exchange. So in this case, I mean, I will simply say no without go too deep, but for sure maybe we could explore a little bit further. But for now, I will only say that in principle, no, it's not possible.
Okay, we received the fourth question concerns a practical case and asks, if a foreign company sets up a manufacturing factory in a free trade zone in China, can the factory accept US dollar payments from overseas for goods that are shipped directly to customers within China?
Okay, even this one here is for sure a very common question. So I can consider is therefore is very important. This kind of setup is not typically in compliance with the China's foreign exchange regulation, because even though the free trade zone offer for sure more flexibility, if the goods at the end or ultimately are being delivered within China, whether from the free trade zone or from, let's say, some light processing, the transaction is still classified as a domestic rule. In this case, it means that he has to follow the Chinese tax invoicing rules, and the payment should be made in Renminbi. Another thing also I can, let's say, emphasize the fact that the SAFE and the People's Bank of China require that the flow of goods and found is aligned. So receiving a foreign currency payment in euro, in US dollar, for a transaction where the goods, in this case, never leave physically China, will let's say, trigger some compliance issue. So if you decide to structure or establish your company in a free trade zone, we need, let's say, to look this transaction aspect very carefully to better understand if is the proper choice for you.
Okay, so we have the last question from the files we received, and we see in the Q&A section that we received the other 3. I think that we can take the remaining 4, and then we remind the audience that they can ask directly on our website. So the 5th question asks, with the current macro situation, do you see a trend of increasing transaction in Renminbi where EU exporters directly receive payments in cross-border yuan?
Okay, for sure, yes. For sure, we are seeing a noticeable trend also on the economic media in this direction. More European exporter, especially the ones who engage frequently with large volumes of trade with China, they're starting to adopt or accept the payments in RMB. And I can consider that there are a few reasons for this kind of swift. For sure, the Chinese government actively promote and encourage the use of the RMB in the cross-border transaction. So there is also a direct support from the Bank of China, for instance, and a number of what I can define as clearing centers worldwide. Also, using the Renminbi can help both sides to avoid the exchange rate risk. I mean, as everyone knows, especially in today's volatile environment. So for European Union, let's say companies accepting RMB payments can also improve the relation with the Chinese counterpart. So I can conclude saying that overall it's not we expect that this kind of trend keeps rising, especially among the companies who have or who are investing in the long-term, let's say, commercial tie with Chinese partners.
Okay, thank you very much. I'll paste now the 3 questions we received in our chat. I hope that you can see them, Simone. I'll start by asking you the first one that says, according to what, sorry, I lost it. According to what criteria are Chinese importers classified as type A, B, or C?
I mean, that one is something that comes from the safe, let's say, history of transaction. I remember also I highlighted one in one slide. Basically, there is this table, which I mean, overall, to make it short, depends by the style of the type of payment and the document requirement. So let's say that the classification is based about the compliance history and the result of the safes inspection. I mean, then there is for each category, there is also a different need for application of the payment with the bank.
Okay, the second question goes towards the concept of letters of credit and asks, I am a small medium enterprise in Europe. To get a letter of credit, should I go to any bank in my country, or it must be the branch of a Chinese bank legally registered in my country? What are the advantages of using the latter? What are the typical fees?
I mean, for sure about this question, to have a much detailed reply, in our guidelines, there are some annex where we highlight all the credit institution, and for sure you can, let's say, confirm whether or not your preferred bank can be used. And regarding the fee, I mean, I don't remember exactly. We can sure follow up later via email, but it's not that impactful for the transaction.
Okay, then I think we have one last question before the end of the seminar. We understand that the Hainan Free Trade Port has introduced multifunctional free trade accounts, EF accounts, to streamline cross-border transactions and payments. Could you provide details on how EF accounts work and what are the key advantages?
I mean, for sure, Hainan is a location that is being granted of several incentives from the perspective of the employee, from the perspective of a company, and has been granted the status of free trade zone. Usually, this is something that happens in a part of a city, in a specific designated part of a city, while in that case was, used for the whole province. In this case, about this kind of tool, I need to also double check because it's not something that I saw very often, but I will likely to follow up as well, because for sure is an extra tool that was introduced by the Chinese government to promote that area. So for sure I need to also check.
Okay, thank you very much, Simone. I think that we can conclude here the webinar. And with that, I think that I can thank Simone for joining today's panel. Thank you very much for your presentation. I think it was very helpful. I invite the audience really to go on our website and check out the guidelines, since they are very detailed and they explore in detail every issue that Simone touched upon during his presentation. I also would like to thank the Chamber of Commerce for helping us organizing this webinar. And yes, I think that's it for today. Thank you very much for joining.